All right, recording in progress. What's up, everybody? Good morning. We have a we have a pretty good trading day already. We're going to do a quick review of our morning trading session. So the idea that I want to do that we're going to do here is we're going to like game films of a as a team, when I played football, we would spend hours and hours watching the game film, the previous day's game. If you're a golfer, you're going to watch a lot of your stroke, you filming your strokes and doing all that sort of stuff. It's super important. And what we're going to do is we're going to go back through the trading day that we just did. And, to be fair, we did a really good job of trading it. Almost perfectly. And so we'll go back and see what we could have improved on and where other opportunities could have been that we could have taken and like played it a little bit differently. But for the most part, it was just a pretty awesome session. So let's start with our analysis here. We'll start on the daily, and keep in mind, this was going into today was Non Farm Payrolls Day, came out at 8:30 Eastern time, New York time. And so the market was pretty much kind of flat right in here as we started the day. But we had some pretty good ideas that we were going to have a continuation bullish day after, I guess, Tuesday's big reversal day. This would have been Monday, the 4th of July, and it didn't really count as a trading day. It would have been these two would have been the same. So even though it shows up on the chart as that little tiny thing, there was some action on that day too. So it wasn't insignificant of a trading day, but the volume was just so low, and it was a half day, and whatever movement happened was just kind of an engineered fun trading session for traders. Okay, so we're going into the day. We've got this, we know we're in, well, you can see it down in here. SQN is -6.6. So it's still in bear quiet, though really close to going back above to neutral. Let me throw on, it would appear I don't have the SQN. So as always, SQN Christie Fallible, the Christie macro one. It's the one that has 170 likes and follows. Apparently none of the any of the others that have my Christie macro. That's the only one that has any likes on it. No. So I just have my smart speaker talking to me. So we're in bear quiet. The trend's down. What works in bear quiet? We know day trading is by far the best strategy to be trading a bear quiet market in, especially in the indices. But so we already know we're trading that. We had plenty of reason to believe that we would trade inside today's range, but it would be a generally, if we're down in here, we're going to be either up trading this top of the range or down to the bottom of the range is what I had posted in the Slack channel. And I'll just read it out real quick. Good morning, team. No opening gap trade. Got long on the recovery from NFP sweeps of the low, which I posted. You guys saw the trade signal. This was just a follow-up. Overnight trade was balanced in the top half, meaning bulls are in control. And so let's go see what that looks like here on an hourly chart. So this is our hourly chart. Yesterday's close was right in here. And then we pretty much spent the night in the top of that range. So yesterday's open and then yesterday's close, we spent, so 50% is like right here. So we ran the sweep, we swept the lows. Any stops that were, well, not any stops really, but the midline, we touched below the midline. So, when you're below it, your bears are in control. When you're above it, bulls are in control. So we came down, held it mostly. We swept it a couple of times to trick out some stops. And then going into non-farm payroll, that was the final flush into those levels. So it was in here that when this level held, yesterday's low held, that was the point to me where I was like, okay, they've ran the stops there. Now we need to start looking for longs. So that's what I had. Overnight trade was balanced in the top half, bulls in control until non-farm payrolls, but we've since repaired back to the overnight range. So it was going into the non-farm payrolls. It was up in here, and then all of a sudden non-farm comes out and it just dumps, right? And what do? They're just sweeping the lows. They're taking out any weak hands. They're engineering a anybody who was long and had stops in here, it ran them out. And then anybody who wanted to be bearish, you had the lower highs in an insignificant time of day. So anybody who got sucked it short on the non-farm payrolls, it got them down, and then we ran those stops up to here. So those stops have been ran, and but going into it, I'd be surprised to see a continuation higher above yesterday's high at 39.14 or 39.1425, which we actually did get to 39.22, so 7 points above. But then I said, the top of the range and the bottom of the range is what I expect. Any breaks and follow through, I bolded that, above 39.1425 or below 38.75 would indicate a bigger move in that direction. Keep in mind, I don't mean a troll spike. We got a troll spike right here. And reversal below those levels, but a breakout, retest, and go. So we've got the breakout. Now it's a troll top. Now we've come back in. So it could be the pullback and go, but so far it's more of a we just troll topped. We hit that top of that range and then reversed as expected. And that's, you can see I had this line over here from the it would have been the June 28th low of 39.19. It looks like somewhere in there, right in here, 39.19. And so, yeah, we pierced it a little bit, and that's what I call a troll top, right? It's a troll top because a bunch of people are going to have this level as being significant, and certainly that 39.19 is being significant somewhere. So when we go above them and we reverse down in, that trolled them out. So any shorts would have had their stops here and here, and they just got their stops ran. And notice we're going down. So if you're short, you're in the money pretty good from yesterday. And then if you were from here, you're still any more shorts is going to be this 39.50 area. So we've ran all short stops out of the way. We could very well continue higher from here because it did go above there, but we got the breakout, and now we look for a pullback. So there could very well be a move here. We're only up 10 13 15th 1%. So we're barely even positive on the day. So we could easily, even though we've moved 50 points already, we could easily take off to that 39.50 level. Could happen on a Friday in the middle of summer when people are, leaving for the day already. There is a very good possibility that could happen, but that's what we got to deal with now that we're on the mid-session break. It's also a good time to run those edges during the New York lunch session, which we're running into right about now. But let's have a look down. Let's get tactical down to our 2-minute. So non-farm payrolls, just move it over here so we can see what everything. Okay, so this was the high, yesterday's high. Okay, Thursday high. Type. So we got context. Okay, so this would have been Thursday's low. Okay, so we take that forward. This would have been the overnight trade. So the last trade of the day would have been right here. So this is the end of the day right here. So you can kind of see what do we want to see here. We want to see this, what's 50%? 50% is right in here, 38.89. Let's go here, and then we can move it forward. So we're going into non-farm payrolls. And if we look back at the trading day, the overnight session, I should say, if we look at the overnight session, we're above the overnight session as we're heading into non-farm payrolls. We've swept some lows along the way here, you know, so these were our lows overnight, and you see we swept down below those, and then we swept that one, and then we took out those highs. And this was just overnight trade, so it was like, you know, 2 contracts here and there. It wasn't anything big, but at about 5 a.m., 5:20 or so, it looks like they started to run it up here. So we've swept these lows and we're running it up into we're the top session of the non-farm payrolls. So had we broke yesterday's low, remember that's what I was, you know, that was a key thing for me. The 38.75 basically was the number that I expected to see. 38.60 was our, I think that was our lows, the stop we put in. And so here we get an NFP print. You know, the best job growth in history, I think. You know, like pretty impressive NFP came out, and I think we beat by a large margin. Expecting, what were we expecting? Expecting 372. I'm sorry, we got 265,000. 372 was the actual number. So a big number. Very positive. New growth for the U.S. economy, and they run it down. So what did we get here? This would have been anybody who was long. This would have been where they were stopped out. Anybody who wanted to go short, that was aggressive on that trade, they went short in here. But notice we didn't take out Thursday's low. Okay, so when we didn't take out Thursday's low, for me, time did I get in? Let me see my timestamp here. 9:05. Okay, so at 9:05 we got in at 38.82. Okay, so right in here, almost perfectly on that dip, 38.82. Look at that. So let's see how tight that was. At 9:02 I called it, I'm sorry, 9:05 I called it. We would have gotten in low on this candle here. So at 9:10 a.m. got filled on this one, and this was the open. And they did one more run, because this would have been where the previous swing low, if this held and this held, in people's mind, you would have a higher low, right? If this price would have held. So traders who don't know what they're looking for are going to put their stop, you know, aggressive traders are going to try to put their stop right here, especially as it starts moving, right? Move your stop up to break even, and then they can run it out here. This is key. This did not take out the low of the morning, which it would have been fine as long as Thursday low didn't get taken out. And it didn't get taken out. And we just pretty much, after that little, you know, it was an hour of sideways confusion and everything. We took off. Now, where would a better trade have been? A better trade would have been to wait for the open and then, you know, let this play out, see where this would have gone. And for me, I see this area right in here as a price gap that didn't fill. Okay, where's another one? Boom, boom. That would have been another one right here. So if that one didn't work, this gap right here would have been the second best location. Well, the only you couldn't have gotten in on the other one. Now you would have been, ideally you get on this one because what you have is a price gap, right? Remember what price gaps look like. Price is where there's no overlay of prices. So this was just straight up right in here. We did get an overlay here, right? Another straight up right here, and then it came back in to fill that area. So right there, here's the new gap. We have a second gap right in here, right? So here on this, as this goes up, it would have looked like a gap the whole way through. As it come back and close it in, it's right there. Boom, pull back. You put your bids right in here, somewhere in here where you're comfortably going to get hit, maybe even around here, because you also had another gap right here to here. Another gap here where prices didn't overlay. This is just nuance, like such nuance, right? And it isn't new. This is Albrook stuff. This is, ICT stuff. Like there's a lot of people out there who, this isn't anything special. It's not me being anybody super ninja seeing this sort of stuff. This is it's just known. You can look in the price. You can look in the price book and you can see that no trades were traded there. So there's gaps. We also have, here's a gap all the way up to here from 38.90 or so to 39.04 or so. Big gap in price. That's where it's just bid, bid, bid. Luckily, we were in that trade at that point in time. And that still is holding, that gap still there. So, and that's what I love to see. I like to see, I call them like stacking gaps, I guess is a term I like to use. I like to see just those big bids. Now, likely they come down to get filled, but if they don't get filled, that's either even more information that it's bullish. So we got in over here and we took this heat. If we were able to do it correctly, the best place would have been to put your stop in here, 38.76, and get in at 38.82 or so, let's call it. So a 6-point range, whereas the trade we were in was a 14-point range. So double the position size. So I had 7 contracts. That would have been probably a 6-point range, probably 15 contracts. So instead of making 1,000, that would have been $2,000. So this is why I say this is the best trade we could have done. This was a good one. Great job. Yay. We had a lot of heat. We had to have a big range. There was a lot of 38.68. Yeah. So right in here. Now, also one thing I did is I made an adjustment because the original trade, POTUS is on the mic, by the way. POTUS on the mic. So I originally put it at 38.68, which is the low here. I moved it down one tick, 38.67.75, because if it would have gone below that low, that would have negated everything and I would have had to restructure everything. So I'd have taken that 1 hour loss and redo it. Now, let's say best case scenario, we take this trade. And let's just call it, where was it? That was that. Let's call it 38.82 with a stop at 38.77. 38.82. And then 38.87 stop. 77. So we have a 5-point range as opposed to a 14-point range. So that's nearly a triple. So I would probably have a 16, 17 contracts as opposed to 7 contracts. So that's why that's important. You see, if I would have been able to risk my normal risk, and had I been able to wait for this trade as opposed to taking this trade, I would have probably be sitting on a $3,000 profit instead of a $1,000 profit, right now. And like, this is why it's important to go over this stuff, right? This is why it's important to figure this stuff out so that you can go in and, get better. It's not that I'm not, happy about the trade that I did. I am. It's that I just want to be better. Okay. So there's that. Now, if we didn't get that, we could have looked in here, and an even better spot could have been with a stop here, 38.85, with an entry at 38.89. So now 4 points. So you're looking at least 14, 1, 2, 3 and a half, 12, 15, whatever, 15, 17 contracts, maybe even 20 contracts in this range to get your same percent risk. And now let's count up. Where did we get out at? We got it 39, 13, 25. So right in here. Okay, now let's measure how many R's that would have been. So on the original trade, this is what we got. It was 2.23 according to my spreadsheet. Now let's see what our next best position would have been. How many R that would have been? That would have been 5.59 R. Okay. And then our final best spot would have been 5.71. 5.59, 5.71. Okay, so let's write this out. Okay, so what do we see here? The best trade would have been to wait until all the way up here, right? Everybody wants to get in early at the very bottom and, feel that. The reality is, let me do some math on it real quick. So 2.23 times 500, 1115. That's about right. Okay. Times 5.59 equals 27.95. Times 5.71. That is 28.55. Okay. So we can see, even though we got in at such a good level over here, and it was the same level you would have got, it's still the same level over here, because the stop was twice as far. We got in, think about this, we got in the same level as the second best position, and even better than the third position, and we lost more money. We left more money on the table in that early entry at the same level, simply because of where our stop placement was. And then that gives us our percent risk, right? When your risk, so 1 R is about $500 now for me. Let me show you what I've done here. So, okay, I need to kill this. Some other math I was fighting with somebody on the internet with. So let's look at my risk of ruin, right? 2.50% is the risk of ruin. Ooh, double X's. Okay. So I'm saying it's going to take 10 trade. Let's say I have max drawdown. Okay. And then max number of losing trades. Let's do 10. I'm actually going to do, that shouldn't be a percent. Okay. Should be 10. Oops. 10. And I'm going to do, that should be max number, not max. Okay, and then max losing plus margin margin of error. So I'm going to say 15 trades in a row. Okay, so let's do that. Equals this. Okay, and then let's do 15. Okay. So for my now, if I only ever lost 10 trades in a row and I just left it at that, I would be running 25 basis points of risk. Okay. But I gave myself a 50% margin of error that I would get 15 in a row. That includes mistakes or anything else. So if I risk on every trade, 17 bips, 17 basis points at 17.17%, I would have to take 15 losing trades in a row to blow up my account. Okay. So now over on my day trading, I started out at 10% risk. Then as I got comfortable this week, I moved it up to 15 bips. And then today I decided to go to the full 17 basis points of risk. Now I'm not running at 25% risk because for obvious reasons, I don't want to, nor do I need to risk blowing up the account, right? So let's take a look at our summary. We've got the high water mark again. I'm up at 25 R in 3 weeks. That's 13 trading days. So 8 plus 5. So 2 holiday weeks of shortened trading. This should be 15 normally on 3 weeks, but because it was holiday weeks, we've only we had 2 Mondays off. So that's why it's 13. Average R per day is 1.94. And the annual projection based on 251 trading days. That means if you trade all 251, and that should be a little bit, it's probably more like 230 or something like that. Because there's going to be days where I don't trade. Going to be holidays, travel days, maybe even 220 is a better number to throw up there. But best case scenario, I make 487 R and average 38 a month. So I'm 3 weeks in right now at 25. And oh, this is that in at risk. Okay, so this should be 500 now, actually. So if I leave my risk at 17%, 17% of $300,000 is $500 per trade. Okay. So if I do that right now and I just trade one account, it is projected that I would make $19,000 and $19,400 per month. I'm 3 weeks in minus 2 days. So I'm actually not a full 3 weeks in on a standard month. I'm halfway there, a little more than halfway there. So I have basically 7 days I have to catch the normal 20 trading days per month, right? So another 7, which is half of this. So half of that would be 4,500. Let's call it 5. So I'm probably going to, best case scenario, I'm going to end up at $14,000, $15,000 for the month. So I'm probably not going to end up at 38.81. If my average per trade, average per day is 1.94, and I trade. So let's see, equals 20 times. Yeah, 30.81. Okay. So I'm probably behind right now by 13 points. So that's 6. I guess that's right. If there's an actual 6 or 7, well, oh, I see why it's going to be coming short, because I was running it at, I run a lot of it at, the majority of it at 300 R. So let me show you the importance of, are you guys all following this, by the way? Is this all making sense? If I'm risking, so let's see, if I'm risking 10 basis points on a trade, that's $300 on a $300,000 account. So 300, that makes you $11,000 per month, okay, by doing 10 bips. If I do the 15, which is 450, that brings me 17,000. If I just go a little bit more and take it up to 500, puts me in at nearly $20,000 a month. And let's see just how crazy. So it's 300, 750 would be a 25 BIP thing. If you're running 25,000, I'm sorry, 25 basis points of risk, that's a $29,000 a month. I think that's a little high. I think you probably want to run around about 20, which would be $600 per trade. So just think of that you've got a $300,000 account. That's 10 losing trades in a row will draw you down $6,000. You have a $7,500 drawdown. So your $1,500 margin of error, which is 2 more trades, 2.5 more trades, right? Which can happen with slippage, which can happen with commissions, which can happen with just I put a buy in and I did a sell, or I put on 12 contracts, not 10 contracts. Like there's ways that the mistakes can creep in there. So this 15 to 17 area is where you want to, probably where you want to be, right? So for me, right now, that's 500. And so that's 19,000, and then trader payout. Let's see what that is. Now I know a lot of you have done the $150,000 account. So that's me walking home with $17,000 per $300,000 account. Okay. So I know a lot of you, and over here, I've done the math. Pretty much the best bang for your buck is the $150,000 account, because you only have to hit 6% profit, whereas this one, the 300,000, you have to hit 6.67, and you have a 3.33% margin of error versus a 2.5% margin. I'm sorry, relative drawdown, right? Now the best one is right here, the $75,000 account. So if you did that, I think that's probably the best. Hey, no, the 500 is probably the best. Well, this one's your lowest profit target and your relative highest drawdown, but I think that. So what does that mean? Let's say you have a, where would be, I wonder where I put all those things. Anyway, let's just call it 3.33%. So now your max losing trades is you can run a 33% risk. So it's 150, 123 times 495. So you're running on a $150,000 account, you can lose 495 per trade, which is about 500, which you're doing at nearly a 300 thing. So it's, you can spend a little bit less money every month, and you don't have to walk that razor's edge, right? Of point. You don't have to run this, this razor's edge of risk. I'm doing it and it's fine. And I'm probably going to stick with it. I don't have a problem with it. I had a conversation with a gentleman who was, doing the math for me on this in the Slack, saying, I'll share it with you. No problem with the dude. I understand what he's doing. What I was getting is that 300 has the worst target to stop percent ratio. I personally quantify accounts in terms of available dollar drawdown as dollar profit target. Virtual balance is meaningless, in my opinion. There's 400,000 accounts with 48K drawdown and 5K drawdown. Yeah. So he's saying, we know this. There's plenty of guys out in our group who are doing the 150,000 tryout with Apex, and you're paying $59 for the opportunity to try out. If you were to do 10 of them, that would cost you $594 the first month. And then what's the fee? $297 for the second month. 50% is $145 or so, $144. So it would be $594 the first month and $1,044 or $1,400 maybe for the second month to pass, because I assume it's about a 5 to 6 week process to pass the tryout. Though this one's still there. And so you're looking at about a $1,500 or $2,000 out of pocket to get yourself a $1.5 million account. And so let's say you're running average ARB per day. So let's do 1,500, 1, 2, 3. So that's 1.5. That's 10 of these accounts. Okay. And I'll do 3 million here, which is 10 of the $3 million account. Okay. Average ARB per day, if it maintains, it's that. Okay, 1.49. I'm sorry, 1.94, not percent. Let's do number 1.94 risk, 0.17%. Okay. Microphone from me, so okay, so per trade, I'm sorry, per trade, and then so it's $5,000 a day for $1.5 million. It's $9,000 a day for and then dollars per month. Let's just do dollars per month equals boom times that's 3881 equals so you're making potentially, is that right? D24. Yes. Okay. Move these out of the way here. Okay. So you're making on, if you bought these, so startup cost, let's call it $2,000. Startup 2,000, 135 times 10 is 1,300. 325 times 10 is 3,200. So we're looking at a 4,500 about, and then insert one left. So that's 2 months worth of fees to do it. And then once you are promoted to full-time trader, once you get those accounts, monthly is 85. Yes. Oops. So you're paying $850 a month, which is not even 10% of your daily return. So if you can trade this balance, so account size. By the way, the gentleman's not wrong who was sending all that stuff, but I just don't see the reason why I would leave, $200,000 on the table potentially there. Now, of course, you could change this if you wanted to do, because you had, let's say, 3.3%, your margin of error. Let's do this again, 3.3. Okay. So let's say you did 22% risk as opposed to, this would have been 17. So C32, E32, C32, E32. So did that adjust? Oh, it didn't. Okay. And then this goes to here. So I'm not going to lie, doing $1.5 million in accounts, you can make 128. Okay. I'm not going to say, I'm not going to lie. Like I'm not saying everybody can do that. I'm not saying everybody can make that, but if you run a good trading strategy and you keep track of it, look, this is a 56% win rate strategy, right? My average winner is the same as this one over here, which is a little bit better, 72% win rate, but my profit factor is higher. Expectancy is higher over here, but it's getting back up there. The SQN is better over here, 6.17. This is 3.61. It's getting better. I'm at a 3.13% return on investment so far. So I think it'll end up being around 4% on the month. So let's just do hypothetical. Let's call it 4. Actually, let's find that what it is. Equals divided by 13. This is my daily. Okay. Let's see what that is. 1/4 point, 24 basis points per day equals this times. All right. Okay, that's 24 basis points a day. So theoretically, you're making $3,600 a day, $72.23 a day based off of this pattern, saying you're likely going to get, and then so equal this times let's 251. Let's see what that actually looks like here. So a little bit closer to this is best case scenario right here, $500,000. When we look at what my live results have been, you're making $1 million to about $2 million a year. And it costs you this to go. All right. AK had a question. Let's take it real quick. Okay. This is where we are. We took the right exit. We should have been. Now here's what should have been happening. Okay. Let me update my, let me answer AK's question. So if I'm understanding correctly, you need to have multiple accounts to get up to 1.5 million. Yes, you did. You did hear that correctly. So what we would do is we would have a trade replicator in Ninja. So you just put your one trade on your single screen, and then you have 9 other instances that your trade replicator would have you in. And that gets you your, it will require a tryout for each one. Exactly. That's what this is all about here. So it would cost for each one. That's why this big deal is so nice right now, 80% discount. So it would cost the first month, if you did a $150,000 account, it would cost you $594 for all 10 accounts. If you did the $3 million account or $300,000 account, that would cost you $1,300 or so for the first month. And then the second month is a 50% discount. So it's $325 times 10. So $3,250. So yeah, that's $4,500. And then this one I think is 80%. 150, so 1,500 per month. Yeah, about a little over $2,000 for 2 months worth of work, because it's going to take you, in using the model, using the way we trade here, it should take you about 5 to 6 weeks to hit your profit target in the tryout. Now, it's going to take some work to get as good as I am at this. So that's why you're practicing. Now, also look at me. I'm doing only one account. So I'm saying this is what's potentially out there. It's going to take me probably 6 months or a year to get to that point, because I'm going to bring them on, one at a time, slowly but surely, making sure that I scale up with it. I don't want to go just straight, I'll throw a trade replicator on and fire up 10 accounts and then have, blow up 10 accounts at once. I want to, let me turn off my TV here. I had Bloomberg running this morning for the Non Farm Payroll, but I forgot to turn it off. So let me get some music going. So what I'm going to do is I'm going to do one of these tryouts, another one, add it to it, use my trade replicator in the next month or so, get it up to speed. And by then I should have within 6 weeks of now also there's going to be mistakes. So that's why I'm just going to add one account at a time so that I make sure that, first of all, my main account is working well. And then when I add my second account, I want to make sure that it is, it's working well too. And if it can pass the tryout and go live and continue to function as if it is like every other one, great. Then I'm going to add probably 2 or 3 more. And so within maybe 6 months, I should have about 5 of these accounts up and running. So at about 150K. Look, that's my plan right now. I still need to think through a lot of these things. I still need to figure out, logistics and make sure my system's the correct system to handle 10 accounts at the same time. Or maybe I need to, get a little bit more organized. But yeah, we're talking some real money is available here when you're running multiple accounts. And by the way, just running one account, even just one account trading a 56% win rate strategy should pay somewhere around probably $12,000 to $17,000 per month. If you're, running this sort of thing. If you're running this model, what is that? 1.55 today. So this, even though it's a higher win rate, this one isn't making as much R per day as this one. So the lower win rate is still making more money per day, even though it has a lower win rate, or even though it's a 56% win rate as opposed to a 72% win rate. And then all that data is right here. You can go through, you can tinker with all this sort of stuff and figure out where your, what you would expect to be making. You can walk through all this, 2.5% risk of ruin, a 4% risk of ruin, 10% risk of ruin. Is that the same risk of ruin? Oh, this should say 15%. Now, why do I say 15%? Why would I say 10%? Because if you're doing prop, you're stuck at trading 2.5 or 4% or 5%. You can adjust the numbers in here. But if you're trading your own account, a lot of people are comfortable with a 10% drawdown on their personal account. You've got let's say a $50,000 account, you take a $5,000 drawdown. That's not that big of a deal to a lot of people who don't understand what they're doing. But if you're running a strategy that, does have, in fact, if we look at it here, right, you can see the 50% win rate, it makes the most R. Sorry. As I run these back tests and think about other setups I have to back test, I'm thinking it may be wise to have multiple accounts to run each strategy on. I'm thinking correctly, or would all strategies be run on one account? I am only going to run one strategy on all 10 accounts. The day trading strategy that we're looking at right here that I've been doing, this right here is the only strategy I'm going to run on 10 different accounts. Why? Because I need to focus, and having 10 accounts to trade, 10 different strategies, it's not my game. I'm not into that. I'm not interested in it. I'm going to put all my effort in this and continue to, crush this. No, this isn't the FVBO strategy. This is this thing that I've been taught, that I talked about all morning here. This day trading right here, price action. But you are doing the FVBO right now because you need to learn. You need to baseline there. You need to learn how to understand these setups and the different price action. The FVBO is going to teach you the foundation of the price action that you need to learn, and how collecting statistics and finding the needles in the haystack. You've got a bunch of these strategies that you have in your mind and all that sort of stuff, but you've never stopped on one and just gone 100% all in on learning it. With the FVBO 1,000 trade backtest that you're doing, you may never want to change ever again. You may find a way to make FVBO make 4R a day on a 60% win rate and blow my numbers away. So the key in trading is to focus on the one thing that works for you, and like really go all in on that one thing, and not get caught up on the 20 different cool ideas that you possibly had. So let me, you got to stick with your FVBO, get that done, because that is teaching you, that's some Mr. Miyagi shit. That's the wax on, wax off. That's teaching you how to do a proper back test, grueling through it, collecting the data, and then we're going to slice and dice that data and find some real opportunities in there. But most importantly, when you've done 1,000 trade back tests, the amount of time you've spent learning how to stare at price correctly, identifying this key moments that you need to focus on, and not focus on every other different strategy idea that you have. Just dial in on one thing and get laser focused on it. Once you get all that figured out, it's a lot easier. Trading is so much easier. It's a simple game. Okay, so now let's remember when we were talking earlier. We've had some time to develop. Remember this area, this big gap here, this price gap here that I was talking about earlier. So this big gap in orders that weren't filled have to be filled now. So they're getting filled, servicing the client, getting those good entries that they need to do. Now the order book has been evened out. And of course, now we have another gap. There's a gap here, currently a gap right here. We have gaps up here. Now, okay, how would we have traded this? We got stopped out here. Okay, we hit our overnight range. Remember what the plan of the day was. Remember what I called out the plan of the day. I'd be surprised to see a continuation higher above the highs of 39, 14, 25. And I'm more targeting yesterday's highs as a top of the range today, and 38.75 Wednesday's high as the low of the range today, 38.75. Sorry, as I say, 38, yeah, down in here. I probably meant 37.75. That's not the thing I'm looking at. Tuesday. The highs of, yeah, 38.75 was Wednesday's high. So that was basically where we went down into. Okay, so we've hit our price as expected. As I mentioned in our trade plan today, I expected we would hit the 39.14, 39.20 area. We did. We reversed. If it would have kept going, this is a breakout reversal, and it failed. So that's our first area of saying, okay, now this is where we want to start looking to short. But the relative strength was so strong, I stuck with it. And I put a trail stop here just in case, and it worked and it went down. Okay, so now there's a gap at 39.15. There's a gap at 39.16. There's 39.20. So there's a bunch of areas in here I would look to be getting short on the day. Okay. Going into lunchtime, so I don't do it, but let's look at it. Let's just take it in New York lunch. Okay, so we did come back into it and instantly gave it away. So this one got filled. Okay, so somewhere in here would have been an ideal setup, but there we go. Now we have some gaps, and we know that they're moving this thing lower. What you get with gaps are, it tells you these moves like that, these big solid moves, that's indication that that's the new direction. So you have a bunch of these tight, big, quick drop. So that's thrust. Okay. So breaking this low is going to probably get a reversal back up. And that's where I'm going to want to, in this area, I'm going to want to get short. So let's see what we get. Okay. We broke this low and we broke this low. The next low that's significant is going to be this one too. So any longs that are still in, and this, they said, if they kept their stop here, they would have moved their stop to here by now, if they're still in. The rest of us, we got out up here. So where am I going to be looking to? I'm looking for a pullback into this area to want to get short. A little bit of a pullback, that'll do. Depends on how aggressive you want to be. I'm looking for a little deeper pullback in. Okay, we've touched this low. We haven't ran the stops on it yet. So what this tells me is maybe it wants to go higher. So I'm going to wait until I get further confirmation. They may actually run it to new highs on the day, but I'm still looking for, because we hit that edge, the more likely thing is we're going to come back into balance, which would be the midpoint between the Thursday's low and this high. So in this area right here is going to be balance, which is also that big gap area. So I'm looking to get short in there. Okay, hammer, hammer, hammer. These are all starting to be bullish. I'm either going to sell stop below this low here or look for a pullback in here somewhere. So right now, let's put a sell stop below there, that low. So 39.02, sell stop, or I'm still looking for a place to get in up here. And it looks like I'm in. Well, 39.02. Yeah, 39.02. Okay, so we're in 39.0225. It looks like. Okay, so we're in here. For me, that means stop is here. Best stop is going to be right here. So 8-point range. And let's see what we get. We get the move, probably going to retest it. Nope, no test of the 39.02. So we'll move our stop into break even +1 on this here. So we've already locked in 2R on this. We should have locked in 5R. We didn't. This is what, you know, the playbook going over the stuff would be. Now, let's look back and see where would we have seen the better setup. So in here, this would have been a good one right here, because here we do the here we reach into that gap. So that's a really good one right in here. I think best case scenario this would have been a really good one here, short on that and go with a stop here, 39.13, 39.5. So a 5-point range on this one would have been the even better trade, but easy for me to say. I probably still would have been thinking bullish. No, I actually was thinking bearish, but I didn't take that. I also like to wait to get the break sell stops below the lows too, not just limit orders anymore. So as you know, I like those. So there we are. Oh, and we're in. Okay. So we're now in. I would lower my stop here because right now I would lower it here, because that at least locks in like 1R, and it's a Friday, and we are at the balanced area here. The other thing, I could just take a limit order right in here, because we're at let's pull that fib and see where exactly 50 is. We're below 50 already. We're at 61.8. So yeah, I'll move my stop down to 50. That locks in 1R. And if this thing keeps going, we would have had another, a move down to the bottom of the range. When you're done going over ES, could you take a look at NG 4-hour FVBO with lower high setup? I'm testing, looks good. Also nice expansion up, needing fill lower. Okay, sure. Let's take a look. Let's take a look at, okay, wheat is approaching let's take a look at our swing trades. We got cable here. We're long the pound, looking for a move up into the 121.25 area. And then wheat, we're really close to profit on wheat at 890.67. We're at 875, got in at 833. So we're already up decent amount on those. Let's take a look at the 240. You want to do fail vol breakout. Okay, so fail breakout retest short here. So you do have that gap into here as we're talking about. This area right in here has been support. So let's see what the trade would be. Move that over so we can see. So perfect 1.33 to 5892 is the previous swing high. And then 1.2 gives us 5.921. It looks like, yeah, 5.921 as the 1.2R. So 5.90890. Give or take 1.3. So you're just going down to those low support levels. Probably doable, yeah. Probably doable. All right, let's follow through on this. So far, we've got nothing. Couple of big hammer reversals down here at the midline area. We're below the midline of the range. So that means that sellers are in control. So if they can, you're going to, I mean, but it's basically at the midline, but it's slightly more bearish on that side. So anyway, that's what I'm looking at right there. So now in this area, I'm not looking to take any trades unless something comes out of it. We're an hour and 15 minutes in, a little over an hour on our session here. It's Friday afternoon. We got another 10, 15 minutes until lunch is over on New York. And we'll see if the afternoon session brings us any trades. But for now, for me, I'm set. I had an okay day. I made about that. I made a 1093. We should have made that. And then we should have made, so at least 1R 500. We should have made another 500 on this one. So I should be sitting at 1,600, almost 2,000 right now, which would have been $5,000 day instead of a $2,000 day is what it could have been. So understand, I am hindsighting this absolutely 1,000%. None of us, okay, I didn't take any of these trades where I did, but what we did is we just reviewed what we should have done and we carry it forward. So now when we go and do the back testing, like when I go back to, let's say, let's go to 2021. Let's take ES. Are we in U right now? ESU 2020. They do it, yeah, 2020. Okay, so let's go to boy. Okay, let's auto this. There we go. Okay, let's go find when I'm going to back test this guy. Let's say in let's go back to the 4-5-30 time frame. Okay, so we got our 5:30 signal is not signal, but we had a 5:30 news. If it's out, let's see what the overnight range looks like. Okay, we had a big range. Something happened at 3 a.m. 44.27. Well, it's 10-point range. It's actually nothing. Okay, there we go. Okay, so we know overnight, where did our close at? We closed over in here somewhere. Okay, so low 44.12, high 44.20. So nice tight range. Let's get in and we'll see 6. Sorry, it should be the 8:30 time frame, not the 5:30. Okay, so 8:30 low. We're in the top range of the overnight. If I'm back testing this, okay, market opens. We go immediately above the overnight high. That means there's going to be a sell stop gap on the first candle here. So we have a short, opening gap short here with a stop at the highs of the day. So we go short there. Let's see what we get. Okay. And where would the close be? Well, targeting 44.12, I guess, is the only number we actually have at the moment. So as I'm back testing this, okay, boom. We've got a bunch of attempted weakness to move down there, but it's got consolidated. So as an inside day, we are there. So now my stop moves to break even after we make an attempt on it. It's held so far. We haven't put in new low yet. So I'd be looking to tighten this one up. We're half hour in. And okay, stopped out at there. And so if I was back testing this one, right, I would go right into my back test over here and I would just enter it all in my spreadsheet right there. And then I would do it. So what we practiced today as we were looking at this sort of stuff, that's going to inform what my next thing is. We have this gap, boom, boom, opening gap. It got filled, covered, it got filled again. So now I'm looking again to possibly go short. Okay, we've got a gap there now. So I'm going to look somewhere in this area to try to get short. I'm going to look for a sell stop below this range right here. Now, normally I'm just filling this out on the in my spreadsheet, but I'm doing it quickly for purposes of just having it here because it's already long enough video. And okay, I don't even know what August happened. It might even be like a holiday. Look how boring that is. And now we're starting to get a move into the close. Okay, overnight range touches. Okay, so now I'm going to look to find a short in here somewhere. Sell stop below the low of this one. We didn't get a fill on the previous one over here. It never went below our level. So I'm looking at this to possibly short. If I can get a sell stop below, no fill. There we go. Now we're short. And high of the day is my stop. And so I would be entering this into my spreadsheet. We're coming into the close. And end of day close, which time? 15:58, 44.26. So 2-point move, 4-point max. It's just a dead range. We probably wouldn't even be trading the S&P. If that's happening, we're probably in something far more interesting. Whoops, not that button. Here we go. Okay. So on our ideas, we're still in here. We've ran the edges again and put in lower highs. So I'll lower the stop down into here if I'm trading this. Now, remember, all we're doing is, this is hindsight stuff, but I'm trying to rewire my mind to get better at this. Okay. It's not me trying to tell people what I would be likely doing. I already know something happened. So now I'm figuring out what would I be doing here to improve the chances in the future. The more I practice, the more times I do this, the more times I'm rewiring my mind to see these opportunities and be able to start trading them. Okay, guys, that is it. It looks like I am not in any new trades. We'll see what the remainder of the day does. Time to go work out. I'll catch you guys all later. It was an awesome session. I love you all. Bye.